just having fun here with the management of TCS. It's $100 billion, and I'm just going to introduce the the top team once again. We've had a very engaging interaction with Rajesh and with EGS, but Ajoy is there, Ramki is here, and Krithi joins us for the first time on ET Now. So very warm welcome. Thank you for joining us. Ramki, a tough quarter where wage hike was there and yet margins were good. The ambition remains 26 to 28. Is it achievable?
I think, as you rightly said, in this quarter, we had the 180 basis points impacted due to the normal increases which happens in Q1. But we were also able to recover about 70 basis points from the operational efficiencies. And that's been always a pattern. We do the increases in the first quarter, and then through the year we are able to use our levers. This time we have got this, and of course exchange has also helped. So we look at it more from a holistic perspective. One, from the growth being better than in the last couple of years. We've always maintained that growth will give opportunities. Second, the scaling of digital definitely which is happening. It is getting embedded in almost all engagements, and it's not necessarily the big ticket, large transformational programs, but across the board, across the segments and across industries, because of the various offerings which we have and the impact these digital technologies are making in the growth and transformation agendas of our customers. So once that is kicking in, that gives us opportunities. Three, of course, large programs are kicked off well, and they will. We hope that they will pan out well. So I think from all these perspectives, barring any unforeseen developments, we should be still very much focused on that, and that's what our teams are all doing.
Ramki, over the years we've been accustomed to talk about the margin band, but what has changed in last 12 months is the buyback. Because of buyback, if you're a minority shareholder, if you're an institutional investor, return ratios would change. So I want to understand, what is the long-term plan for your return ratios? Where do you see your return on capital to settle down? Things will change. You start giving more cash back, return ratios will change. Yeah. What is the ambition on that?
See, I think we look at it as a more holistic shareholder returns. Today, of course, return on equity, etc., is around 34% or so. But looking at it from the buyback is also related to what we can do with the cash. If there is immediate no immediate requirement for the cash, and if we deploy it in the business, if we have enough opportunities to deploy it in the business, we'll continue to do so. No investment programs are put on the backbench. So it is from an overall shareholder returns is what.
No, I understand that completely. But my question to you is that you followed a pattern. We know how much you spend over the years. We know that the free cash which you generate, how much you have distributed in terms of dividend. But this time around, there are two buybacks which are at play, and these are large buybacks. These are not small buybacks. Yeah. The cash will come out, return on equity will improve. I'm sure you've done some internal numbers as to where do you think your return on equity will settle down. The reason I'm asking this question is because that's the way markets would look at it. I'm surprised no brokerages are talking about it today, but return on equity is a benchmark for P multiples. Right. So where do you see return on equity will move?
See, we'll take it as it comes. We are generating close to around 27,000 crores of free cash flow, and with the business and with the various drivers that continues. We'll also look at if there are inorganic opportunities, what it does, and we are focused on most of the free cash flow to be returned to shareholders, either in the form of dividends or this one. We'll look at we'll take it as it comes.
Fair point. Well, once again, a warm welcome on ET Now. Your vertical has been the so-called outperformer for the quarter gone by. What has changed in last 2 quarters? Why suddenly BFSI is making such a big comeback?
See, I won't call it a discontinuous break. It's a transformation, but slowly happening. We called out a couple of quarters ago also. Some of the banks in US have been more focused on their workforce and workplace transformation, more internally focused in revamping their strategy. We believe that they have completed their internal strategies, and there's a lot of focus on transformation agenda around how do I adopt cloud, how do I APify my internal systems, how do I strengthen my core. So there is a lot of transformation agenda back on the table, and we have our business 4.0 framework which helps them in leveraging these technologies much better. So we think there is a resonance of our offering to those banks.
Is this beginning of a new cycle?
In Europe, see, I just want to be a little cautious here. Like, I don't want to say that it's a new growth cycle. Europe has always been on a growth path for us. The softness was primarily in North America. We believe that it is coming back to normal. I don't want to call a drumbeat saying that we are in a new growth cycle. I would say more it's coming back to normalcy.
But would you drumbeat that America is back?
America is showing signs.
So let's drumbeat there. Okay, great. It's a big market. So I just want to be very clear as to what we are communicating. 4 lakh employees, it's another milestone. Nobody is talking about it.
No, we did. Yesterday we said that, okay, we have talked about multiple milestones, right? As far as this year is, this particular quarter was concerned, 5 billion as far as total revenue.
Officially, press has stopped asking a question on attrition.
On attrition.
That's manageable,
so
right?
We are the industry leading.
It doesn't happen by magic.
So this one, and from a headcount point of view, 4 lakh plus, yes.
Of course, I've seen the number of the years go to as high as 14-15%, and then it's come down.
Of course,
so
yes.
It's been a cycle.
Somewhere around 15-16 also we have touched. So from there again back. So it's but over the last few quarters, I think over even last 2 years, if you see, we have been maintaining very well from a retention point of view. Attrition has been low, and it's not only in the IT side, it's in the BPS, it's overall. So it is across the globe. If you look at our total attrition, that's what it is at 11.7. So that is what we have been maintaining very well. So the people are pretty happy. They are getting the kind of opportunities that people want from the point of view of their own career growth, from the point of view of learning. And our focus has been in developing the talent base internally so that we are able to meet customer requirements. We are talking about business 4.0, we are talking about the digital technologies. So we are creating those kind of opportunities for our employees by giving them the facilities that they need to build and develop their competencies. And that's what is helping.
Exactly 18 months ago, a lot of IT companies, a lot of your counterparts, decided to reduce the workforce. TCS, look, we will not reduce them. We are the Tatas, and we will train our employees. Are you getting a sense that the challenge, which was a challenge for the IT industry or the IT sector per se in terms of rekindling, reskilling, reorganization talent, is that now behind everyone?
So the industry is such where technology will change every 3 to 4 years, right? Now the kind of change would depend. Like this time, the kind of change that we are going through, the digital wave, which is a major disruptor. So that is a major change. But continuous change is part of life. So everybody has to be continuously on the learning path. And that is what we say, that everybody needs to spend some time on their own. Organization has to have that facility so that people can learn and stay relevant to our customers, to the technology, and to the profession. So this is that profession where you have to continuously learn.
Are you reaching that point in TCS where perhaps we should not measure the total number of net employee addition as a yardstick of growth, because the employee per contribution is increasing over the years, and because of skilling, output also is changing?
Yeah, so the whole industry is changing. The way what is being delivered is changing, and the way you are pricing that, the way it's being valued, that is also changing. In addition, what is happening is a whole lot of automation is kicking in. So as a result, it's not really the net addition; it is the value that you're giving back to the customers. So that
your
is the
annual
way to
report,
look at it.
even though it's thick and fast, I always love to read it.
Absolutely.
And there's a number which you always mention in your annual report as to what has been the productivity per employee. How much money TCS makes because of per employee. Where is that number moving for TCS?
So that number, productivity per employee, in terms of, let's say, if it is revenue per employee, profit per employee, there are many ways that you can have your own measures. So if you look at where we are continuously increasing that.
Where would that settle?
Where will it?
That settle. I'm asking you numbers where you will have no problems in giving me a numerical guidance.
I will not be able to give you that guidance as to where will it settle.
The trajectory will be in the
higher. So we are moving up. Yes.
Because it's a combination of several factors. And the other thing which you talked about apart from automation,
It is definitely moving up because 3 people have told me in a sync.
Exactly.
also the location independent agile, which we have been really pioneering and been able to propagate and be able to actually implement, that also has non-linearity, etc. So a lot of factors are playing into it, and you are absolutely right. Some of these metrics actually lose a little bit of their relevance because you need to look at it holistically across multiple dimensions, from what is happening because of the platforms, the other products which we have, in specific segments, the automation, the agile, so all of it, and also the cloud. So a lot of things, and which is all fits into our business 4.0 framework.
Thank you very much.
Thank you.
Thank
It was
you.
great to have you on ET now, and I certainly hope to see much more of you going forward. Ramki, always a pleasure. Joy 4 lakh, congratulations.
Thank you.
For joining us.